So many people in the property space keep where they're buying hidden. All I want to do is share the knowledge and share the wealth with you guys. And that's why on this episode, I'm going to reveal my 4 most recent property purchases, what they are and where they are and why I bought them. I'm Jeremy Iannuzzelli. This is what school should have taught you. Let's get straight into it.
Everything school should have taught you in one place. With a property portfolio of over 17 million and an accountancy firm of over 16,000 clients, as well as being an accountant to some of the wealthiest people in Australia, Jeremy Iannuzzelli will be sharing his lessons on everything school should have taught you so you can build the life you want.
The last 12 months have been extremely busy for me. Yes, managing a practice with lots of clients, helping and assisting people with everything to do with tax, compliance, structuring and strategy, but I always have to set time for myself, and this year has been a very busy year for me in terms of buying property. I've bought some property and I've also sold some property as well, but I want to share with you guys my 4 most recent purchases, where I bought them, why I bought them and what I bought. And I'll start with the first property. I'm actually going to share the listings with you and be very transparent with what I paid and why I decided to buy this particular property and the strategy and exit strategy around it. I'll start with the first property, which was purchased at 9 Bridge Avenue, Oak Flats. Now, what you'll see when it pops up on your screen is it's a property that actually has waterfront appeal. Now, I wouldn't generally call it a lake. It's more like an inlet, but the property was sloping down to the inlet, a great 700 square metre block. You'll be able to see the listing if you want to pop over on your own computer or own laptop. But anyone who's listening on iTunes and Spotify, head over to the YouTube channel. You'll be able to see as I scroll through. This particular property was quite old, so you can see from the aerial view here that the property itself had really good appeal, nice clear backyard, a couple of trees against the waterline itself in the south coast of New South Wales, in a beautiful little spot in the Lake Illawarra region, just south of Wollongong itself. The property met all the parameters I was after. I was after a good street and the worst house on the best street. The rear of the property was actually the water, so the land could go up in terms of square meters or down depending on what the tide was. But the property itself was purchased at auction around April of 2024 for $920,000. We had plans with this property to actually build 3 dwellings on it, which was a duplex at the back and a townhouse at the front. Exit strategies on it were a plethora. We could have left it as it is. We did buy the property at a very good price. We were planning on doing multiple different things. We could have renovated the home and gave it a massive reformat and a big renovation to make it look pretty. Knocked down a couple things, but the decision was to actually get this into council and build 3 dwellings on it. We had the opportunity whether we wanted to keep them or sell them, which means that we would have to pay GST on the margin scheme if we were to sell it. So it would have diminished a little bit of our profit, but nevertheless would have been a really good property to hold long term. But another property came up around the corner, which was something that we've been looking for quite a while. And on this particular street, being Reserve Road and Horsley Road, again, the same location, same area of Oak Flats, very rarely do properties come up. When it did come up, and this now takes us to our second property, 3 Reserve Road, which again, you'll see on your screen. Again, lakefront property, really good north-facing backyard, beautiful views straight over the lake and also over the Kira Mountains. Again, in the same location, south coast in the Lake Illawarra region. This is about south of Sydney by about an hour and a half on a good day. Property had everything that we wanted. House had already been knocked down, fences being done, retaining walls, a little bit of a makeshift jetty which has now been pulled away because it wasn't council approved or complying. But nevertheless, this property ticked all our boxes. The only issue was we had just started to submit all the plans into council for Bridge Street. This was a mortgagee repossession. It was one of those timed auction type of sales where it was best offer in at this time. We made an offer of 1 and all 5, so $1,555,555.55. So a very weird number to put in there, but that was just, be a little bit more than the people that would have offered 1.5 million flat. Believe it or not, we actually didn't get this property to start with. It was sold at actually $1.65 million. We spoke to the agent. We said, look, we're still keen on it. If anything falls through, let us know, because it was, again, a 66W arrangement, meaning that there was no cooling off period. You had to follow through if you sign on the dotted line. Now, just to put it in reference, a 66W is you as a buyer waiving your right to a cooling off period. A couple of you might be asking, well, Jeremy, why did you go spend $920 on a property that's still water facing an inlet versus this one here where you went and spent nearly $500,000 or just over $500,000 more. Now, the difference is this is probably one of the best streets in Oak Flats. In fact, Reserve Road, we're the only home on Reserve Road, and I'll show you some other photos of it. But it is a fantastic area, north-facing block, so it's got some really good sun that comes through in the afternoon. And the block is nearly 1,000 square meters. So this actually block has a huge amount of opportunity, whether you want to do 3 or 4 townhouses on this particular block. We've actually opted to do a duplex and have 2 attached granny flats to them because each side will be over 450 square meters. And you can see there a large portion of work's been done, stormwater, drainage, house has already been knocked down, so that saves us about $50,000, $60,000. Retaining walls, a little bit of landscaping's been done as well. So a lot of the nasty hard stuff at the start's kind of already been done. And for the area itself, a property that's been fully completed, single dwelling, is selling north of $2 million. So we've got a really great deal, but the challenge is that we had to sell Bridge Street within a 15-week period. So part of us winning this particular property, when the original buyer fell through, he couldn't actually commit with his $1.65 million price. We had 15 weeks, and we negotiated that as part of, the agent coming to us and saying, Jeremy, you've got the deal, and this is actually a property that I bought with a past attendee of this episode, Mr. Jonathan Karapolewski. So again, if you want to know who he is, what he does, go back into the episodes and have a look at when we spoke to John Karapolewski from Caraplan, who's a property consultant. But we were able to mock up some designs fairly quickly, know exactly what we can do to try to optimize the site that suited our needs. But we had 15 weeks to get Bridge Street being sold. Now again, going back to Bridge Street, and I'll just scroll down so you can see the prices. We bought this for $920,000 back in April of 2024. This property actually settled in July because again, we negotiated an extended settlement period, and we sold it in March of 25, so 19th of March of 2025 for $1,075,000. So even with interest rates being high, even with a slightly slower market in New South Wales, we're still able to obtain over $150,000 of growth. Although take away stamp duty and selling costs, we probably walked out with about $100,000 profit. Now, there's no capital gain discount because as you can see there, we sold it within 12 months from the date of contract. So unfortunately, we did lose the 50% discount, but we needed to sell this particular property so we could go into Reserve Road. So that's where you've got to make sure that when you're buying property, you're very nimble. You've got various different exit strategies, and you can see this one here has got a great 21 metres frontage, a 75 metre and 63 metre side boundary respectively with 11.5 at the back. The building envelope though gives us a really good opportunity to build a double-storey duplex with 2 attached granny flats as well. You can see there we're the only house on Reserve Road, so our neighbours are the trees, and we've got another neighbour here which has a beautiful property again with a north-facing backyard. So these are the type of properties as an investor I like to be very active with. I'm very nimble. So I'm always looking when I'm buying properties to have an exit strategy. How quickly can I exit this, and can I make profit on the exit? So I try to buy right when going in, and I try to buy properties with multiple X factors, things that I can improve the value, things that I can increase the value, and either look to have an exit strategy on. Now, typically for me, when I'm buying residential property now in my journey, I'm looking at buying those properties, adding substantial value, and then potentially moving them on if the cash flow is not right. So I'm happy with where my balance sheet is. I'm happy with my denominator of my portfolio. Now I'm just trying to accumulate chunks of capital to do bigger and better things. I don't have unlimited borrowing capacity, although I do have very strong borrowing capacity the way I've structured all my investments, but I can't just go to the bank and ask for $20 million. I've still got to prove to them that I've got a chosen strategy that works, so they back me in the deals that I choose to do. But that is the outlook of this particular property. Really good views over the lake and over the Kira Mountains as well. And as I mentioned before, it is a north-facing backyard, so that sun's going to be drenching that property well into the afternoon for a majority of the summer periods. Really good location, and again, highly sought after area. This particular property, as I mentioned before, won all fives, $1,555,555.55, and we thought this was a pretty good deal. You can see there, this is an old photo which it had the house already on it, which had been knocked down already. So a lot of the hard yakket had already been done for us. Just for anyone that might be thinking back, oh, Jeremy, it doesn't look like it's the only house on Reserve Road. That is Reserve Road there, and then you move into Horsley. So I can get to say that I own a street, which is pretty fun. But it would take it's only fun and games, of course. But they're the 2 residential properties that have been purchased this year. One that was transacted on the way in and on the way out, and again to buy a bigger and and better property, and to action that quite quickly because we only had a very small period of time to settle Reserve Road and we had to sell Bridge Street to do it. Now, completely opposite direction, went north this time and purchased a commercial property at 2/26 Traders Way in Currumbin. Now, for anyone who doesn't know where Currumbin is, this is South Gold Coast, so you've got places like Tugun, Palm Beach, Currumbin South. Reason why I bought this particular property, it's got about 139 square metres of floor space with additional 60-ish square metres of mezzanine, so in total 200 square metres of net lettable area. The property is currently rented to a mechanic, and the owners have held this particular property for a large number of years, an older couple looking to cash out and enjoy their retirement. I was quick to move on this property because commercial properties do move fairly quickly in this space. Now, why I chose Currumbin is, again, anyone from the Gold Coast who's listening to this particular podcast and anyone who isn't from the Gold Coast, the south of Broadbeach now is really starting to ramp up. A lot more people are moving to places like Currumbin, Tugun, moving to places like Palm Beach as well. They're trying to escape a lot of that light rail construction that's happening slightly north of where they are. These areas 10, 15 years ago weren't highly sought after areas. Most people were looking to move into the north side of Surface or Surface Paradise themselves. But as we all know, the last 5 or 6 years, you've got places like Broadbeach and Burleigh that have really started to ramp up, and now Palm Beach is a beautiful little area, as well as Currumbin and Tugun. So it's really, really popular with the locals, and a lot more tourists are starting to stay there as well. But with a lot more people moving to the area, that means it has a need for business. And I strategically chose to buy in this area because of the population increase that's currently happening in those beautiful locations. People living there maybe also want to transact there from a business perspective. But the reason why I like this particular property, it's actually got very low density. It's only one building with 3 tenancies. One tenancy has about 1,600 square metres, and then there's 2 separate tenancies that are about 200 square metres each. So in total, it's around about 2,000 square metres, only 3 tenants. So it's really not a lot of headaches there. It's not a massive strata plan, and it's got a lot of upside for future redevelopment as well. It's on a great site, and maybe one day someone might come in and knock on the door and say we want to build something much larger. So it's got a lot of development uplift potentially in the future if the 2 other tenants amalgamate and get together. But if not, it's in a really good pocket and corridor where there is not a huge amount of commercial space, there's not a huge amount of supply, and it's going to keep demand quite high. And as you can see there, it's south of Burleigh Head, just south of Pine Shopping Centre, and just south of Palm Beach as well. So really good little spot, really trendy little area, and it's going to have some really good longevity from a tenant perspective. I believe longevity from an income perspective and longevity from a capital play perspective as well. The yield on it is roughly around about 5.7% net, so not a cracking yield. We're not talking about blowing the trees down with the amount of cash flow that it's getting, but I still think it is a little bit under rented and has opportunity to increase in the future. Now, for anybody that's new listening that doesn't understand what a net yield is, generally with residential properties, we talk about the gross yield, which is the rent that the tenant pays, and then we've got to pay our costs such as insurance, council rates, water rates, repairs and maintenance, strata if it's a unit or a townhouse. With commercial property, generally we talk about yields being net, and that means that the tenant is paying a large portion, if not all the portion of the costs, which will include council rates, water rates, strata rates, insurance, etc. So when I talk about getting a net 5.7% yield, that is what's coming to my pocket after all the occupancy costs have been taken into account. So again, it's not blowing the trees down in terms of a yield. It's not high 6s and high 7s like potentially we used to get all those years ago. But I do think there's a lot of scope for uplift. Needs a little bit of a facade treatment, clean up the inside, and we might have a really good tenant to come in later on in the future. But again, the reason why I like this property, south of some really trending areas, a lot of residential transactions happening there for some really good prices, a lot more affluence heading into the area, a lot more money heading into the area. And that means with more people coming in, there's more need for business locations and business premises because those people need to work and service obviously all the residents of the area. The next property I purchased is a little bit more controversial. It is office space in the southwestern suburbs in a location and area that I know. Now, one thing the southwestern suburbs has been lacking for quite a while is good office space. It's got plenty of commercial properties. In this particular area of Oran Park, it's probably one of the largest growing areas in the country by population. You've got the new Bradford City, which is where the new airport at Eastern Creek is being built, and that's roughly around about 6 to 7 k's away from this location. You've had well over 200,000 or 300,000 people move to this location over the past 10 years. There's thousands of more homes in the pipeworks that are getting built. built, and thousands of acres of more land that will be released over the next 10 years. So that means more and more people are going to be moving into this area. There's a lot of investment from institutions in this area as well. You've got some very big players and some very big listed companies which are buying a lot of commercial property around this space. Again, going to be servicing the new airport and all the residents in the new city that's been built around it. I think last time I heard, this is going to be pretty much the first major city in the last 20 years that's been built that is going to house more than 150 to 200,000 residents in the inner ring of the city, servicing millions of people. So great location, office space. Everyone's really probably saying, Jeremy, what are you doing by an office space? You know, everyone's working from home. But what I've started to notice working with so many clients all around Australia is more and more people are coming back to the office. In my office, all my staff work from the office from, flexible timing arrangements, whether it's 8 till 4 or 9 till 5. I like it because it creates a really good ecosystem for learning, and the clients are the ones who get to win. So what I've decided to do is buy 2 suites, Suite 3.09 and Suite 3.10. And the reason for it, it's a really good amalgamation of 2 offices coming together. It gives me well over 250 square meters of space to house the business. And I think from a long-term investment perspective, this has got a lot of runs left ahead of it. And what I mean by that is there's a number of years that this property will get to soak up a lot of capital growth as a lot of infrastructure starts to get built around it. It's next to a major shopping centre, which is the Oran Park shopping centre, in a location that houses thousands of homes as well. So again, not only will the business service thousands of homes around it and also clients from all over the country, it has a direct arterial line to the new city that the state government is building. So this particular property, we purchased both units for around about the $2 million mark combined. I very openly purchased one of the units in my self-managed super fund, and the other unit was purchased in one of my structures. The reason I did that was I wanted to get my super to work a little bit harder for me. It was a great way for my business when I enter in as a tenant to pay my super a market level of rent. And there's no better tenant than yourself. So again, for many people that are out there, self-managed super funds can borrow money under limited recourse borrowing arrangements, which means it's a very special way that you can borrow money to buy property in super. Your structure must be established. I have done how to buy property in super in one of my prior podcasts. If you are watching on YouTube or listening on iTunes and Spotify, go back through all of the podcasts. You'll see there how to buy property in superannuation. But it's a really good way, and it was meant for that purpose. Super was meant to help existing business owners buy their premise under limited recourse borrowing arrangement, and there's no better tenant than yourself. I'm always going to pay my rent on time, and I'm not going to complain too much. So from the 4 properties that I've purchased, you can see there's a wide range of exit strategies and a wide range of reasons why I did it. From Bridge Avenue being purchased and sold to purchase Reserve Road, which is in the same location, far superior property, larger block of land, better exit strategies and better value on the way out. 2/26 Traders Way, Currumbin, really looking at what's happening in the residential market of that side and capitalising on it. Lots more people moving down there, becoming a really trending area. So I went and bought commercial property to help service all the residents moving there. And then we've got the offices that were purchased, Suite 309 and Suite 310 at Oran Park, to really capitalise on the new city that's been built around the new airport, and also to serve a purpose. You've got very limited office space in this particular area, and I do believe there's going to be lots of good capital growth in the future from the commercial perspective. And again, if I ever chose to rent this out to external parties, I think there'll be some really good rental return, because at present office space is very limited. They're the most recent purchases that I've made. A couple have been done with, as I mentioned to you before, a very close friend of mine and business partner, John Karapalewski, who I have done a recent podcast with. Commercial property in there in Queensland, and then another commercial property in the southwestern suburbs of New South Wales. I hope you've liked what I've shared today and give you a little bit of reasoning as to why I've done things and when I've done things. It's been a busy 12 months. I'm Jeremy Iannuzzelli. That's what school should have taught you. Don't forget to hit that like and subscribe button if you're listening to us on iTunes and Spotify, and like and subscribe on YouTube. I'll see you again next week.